we have simply listed the key areas that have been examined. Somebody has mentioned there, audit opinion has been examined, quality control has been examined, the concept of business risks, we have fraud and errors, management representation letter, we have what we call going concern, and then we have subsequent what here? Subsequent events. Ladies and gentlemen, I would want to share something with you here. Very important. Please let me know whether you are able to see my screen. Are you able to see my screen? Are you able to see my screen? Wanasema yes. Are you able to see my screen? Ah, great. Great. Thank you very much. So, nope. That's not what I want. Great. So I just want us to go through some particular questions so that will really help us. And zile ambazo utakuwa unakaa hivi unasema tulisoma kakitu namna hii. Tulisoma kitu namna hii na ilikuja kwa mtihani. Ah. Great. Just a minute. 115. 113. Now, ladies and gentlemen, look at question number 113. Question number 113, I'm going straight away to the marks here for A are 5. Describe external auditor responsibilities and the work that the auditor must perform in relation to going concern status of companies, right? Describe external auditor's responsibilities and the work that the auditor must perform in relation to going concern status of the companies. Mmeniambia going concern is one area ambayo mmeulizwa kwa hiyo kitu. Haya, twende kazi. As I saw some of these students ambao wanasema wajapata hii kitu, wewe uniandikia, what do you think are the key? What do you think are the key? Responsibilities of the auditor as pertains to going concern matters. Alafu ni high level, unaandika haraka. Ni high level. Haya, high level. Aki mwenye atachangia zaidi ndiye atakuwa mzuri sana. It's a high level. Great. Sioni mtu akiandika chochote. What are the key responsibilities of the auditors as pertains to going concern? As pertains to going concern. Mbona wameanza kuandika wanajua? Na mwanafunzi ajisumbue akili. Mwanafunzi ajisumbue akili. Lazima ujisumbue akili uweze kujua kitu mara moja. Lazima usumbuke akili sana. Okay, so already they have the answers, ladies and gentlemen. They have the answers there. Perform analytical procedures. So in this case here, computing some ratios to be able to see the trends. I like this, performing analytical procedures. We have here determine and assess whether the use of going concern is appropriate. The use of going concern is appropriate. I like this. Analyzing cash flows and profit forecast. These are some great things that the auditor needs to do to be able to establish really whether these companies are going concern, right? Consider the appropriate use of the going concern assumptions. So as managers are telling us that for sure these companies are going concern, of course, they must be putting in some assumptions in place. So those assumptions I would want to really get and review them. So I like that. Evaluation of revenues and other projections, I would love that, right? Right. Assessment of going concern indicators. So ladies and gentlemen, I would want to take you straight away to the answer here. So we have here 113. The answer to this 113. So number 113, sorry. So we're given the answer here. The answer is quite elaborative about going concern, the external auditor's responsibilities, and the work that the auditor should perform in relation to going concern. So it'll be very important. Look at how this guy is framing his answer, right? Akona title. So responsibilities. Number one is to evaluate the management's assessment of the entity's ability to continue as a going concern. Consider whether there are and remain alert throughout the audit for events or conditions that may cast significant doubt on the entity's ability to continue as a going concern, right? So they must remain alert, trying to look at the indicators. Inquire of management its knowledge of events or conditions beyond the period of the assessment that may cast significant on the entity's ability to continue as a going concern. Obtain sufficient, appropriate audit evidence to determine whether a material uncertainty exists if events or conditions are identified that may cast significant doubt on the entity's ability to continue as what here, a going concern. So, ladies and gentlemen, they have been able to give us the responsibilities of the auditor. In this case here, the auditor has to be quite keen. Well, of course, taking his audit to see whether there are any indicators of going concern. This auditor, ladies and gentlemen, has to be talking to who? To the management. Inquire, very important, from management, whether the management has got any issues to do with what are going concern challenges, right? So of course, tell the management to put it in writing. And then of course, we've been told very important thing, of course, auditors will always get evidence. So obtain sufficient appropriate audit evidence to determine whether there is any material uncertainty that holds So then what is the audit work? As part of the overall risk assessment, the auditor must consider whether there are any events or conditions and related business risks which may cast significant doubt on the company's ability to continue. Number two, the auditor should evaluate the process by which management has assessed the viability of the company. So the auditor should make inquiries of those charged with governance and examine supporting documentation such as cash flow forecasts and budgets. The auditor must consider whether the period used by management to assess the viability of the company is sufficient. If the period covers less than 12 months from the reporting date, the auditor should ask management to extend the period to 12 months from the reporting year, from the reporting date. Right? The auditor should evaluate the assumptions used by management and determine whether they seem reasonable in light of other known facts. So reasonableness of assumptions. Lastly, we are told here where events or conditions have been identified which may cast significant doubt on the entity's ability to continue as a going concern, the auditor must review management's plans for future actions and gather sufficient appropriate audit evidence to confirm whether a material uncertainty exists. This will include analyzing and discussing the cash flow and the interim financial statements, reviewing the terms of debentures and the loan agreements, reading minutes of the meetings of shareholders and directors for reference to financial difficulties, inquiring the company's lawyers regarding any litigation and claims, assessing the possibility of raising additional funds, reviewing events after the period end. So, ladies and gentlemen, I hope that one has been able to help us at least get a high level of going concern. High level of going concern. Ukiulizwa anything to do with going concern, I'm so sure huwezi ukatoka bure. Huwezi ukatoka bure. So can I go to something different? Can I go to something different? Can I go to something different? So you keep your budgets, reading directors, even directors, board minutes, ladies and gentlemen, yes, to see whether these guys are raising anything to do with going concern, right? Talking to management, ensure that the management gives you a representation letter, right? They commit themselves in writing that this company is okay, right? Right? Assess in this case the reasonableness of the period. Remember the concept of the 12 months ahead. 12 months ahead. Remember the story of Uchumi Supermarket. Uchumi Supermarket, ladies and gentlemen, PwC gave an unqualified audit opinion. When an auditor, you give an unqualified audit opinion, ladies and gentlemen, when you give an unqualified audit opinion, it means that you are even kind of giving an assurance to the users of those financial statements that this company will be there at least for the next 12 months. So Uchumi Supermarket, wakapatiwa unqualified opinion, 3 months down the line, kampuni kaanguka. And of course, the story of PwC and Uchumi Supermarket, because of that period of 3 months, iko bado kwa ukiangalia kwa literature ni quite a lot. So tusienda sana kwa hiyo, describe the possible auditors reports that can be issued where the going concern status of a company is called into question. Your answer should describe the circumstances in which they can be used. How many marks? You must be very detailed. 5 marks. So describe the possible auditors reports that can be issued where the going concern status of a company is called into question. Right? Right? So this is quite important to me, ladies and gentlemen, because when they talk of the auditors year reports that I'll give, number one, I'll ask myself, has the management in this case here recognized that there are going concern issues? If the management has recognized and stated clearly, and of course prepared their financial statements on what we call a break-up basis, the company is going to break up, right? Meaning that they have adhered to the IFRS regulations, right? Right? If they have been able to do everything right, they have been able, ladies and gentlemen, here to recognize, yes, we have problems, we are not able to continue as a going concern. So I have prepared my financial statements on a breakup basis. Then as an auditor, these guys have followed the proper framework. As an auditor, I have got no reason at all to disqualify the financial statements. Right? So in that case, here, I'll go ahead and give what here a good report. But what of issues that have been able to come across, ladies and gentlemen, which really tell me that this company will not be there in the foreseeable future, but the management is refusing. The management is refusing. What kind of opinions am I going to give? The management has gone ahead, ladies and gentlemen, to prepare financial statements that portray that these companies are going concern, but yet there is quite a major disagreement between me and the management. Me, I've been able to see straight away this company is not going to be there. So who is giving me these answers here, really? Nobody has given me anything. So before we look at the answer, nobody has given me anything there yet. Nobody has given me anything there yet. Nobody has given me anything yet. Najua kuna mwenye anataka tuende ati mbio mbio. Hapana, hata kama unaenda exam. There are things, ladies and gentlemen, we must have a helicopter mind over. A helicopter mind over. Okay. Emphasis of matter paragraph. Thank you very much. Hizo mnasema zote ni za ukweli, ladies and gentlemen. Please allow mwalimu to look at the answer. So if these guys have been able to prepare financial statements on the grounds that this company is breaking up, they are agreeing, they are in agreement, then I'm going to issue what we call an qualified what here, and a qualified report, and say RCM Online College. RCM's financial statements portray a true and fair view, a true and fair view. That's okay. But remember, at the end of the day, ladies and gentlemen, it will be very important for you to notify the users of the financial statements that there is a problem in this company. This company may not be there in the long term. So please allow me to read this very fast. Great. So this is the answer. This is the answer. Wanasema namna hii, please be very keen, auditor's reports, where the use of the going concern assumption is appropriate, but a material uncertainty exists, provided that the auditor agrees with the basis of preparation of the accounts and the situation adequately disclosed, and a modified opinion is issued. The auditor will, however, include an EOM paragraph, emphasis of matter paragraph, highlighting the uncertainty to the user and referring them to the details in the disclosure note. Number two, where the material uncertainty exists, but the situation is not adequately disclosed, management feature, right? The opinion should be modified on the grounds that there is insufficient disclosure and the financial statements are materially misstated. Depending on the specific circumstances, this may be a qualified except for or an adverse opinion. Note 3, if the auditor's judgment that the company will not be able to continue as a going concern, and the financial statements have been prepared on a going concern, you see, the financial statements have been prepared on a going concern basis, then the auditor shall express an adverse opinion. Note 4, if the auditors are unable to form an opinion because they were not able to obtain sufficient appropriate audit evidence, they shall issue an except for qualified opinion, or what here somebody, a disclaimer, depending on how our scope as auditors here was limited. Remember what we did yesterday? If the scope limitation, ladies and gentlemen, is just material, maybe on one thing alone, then straight away I'll issue what we call an except for qualification. But what if in this case I'm not able to get information totally, like the Ngilu's case, right? Where in this case you are told that offices were burnt. That's even an indication of going concern when an office is burnt. A serious office, as a finance office getting burnt, I'm not able to get any evidence at all, then a disclaimer will be appropriate. If management is unwilling to extend its assessment, where the periodic considers is less than 12 months from the reporting date, the auditor shall consider the need to modify the opinion as a result of not obtaining this evidence. Ladies and gentlemen, are we okay there? You know, it's not about really you getting everything. It's about you getting snippets of things that you can easily use, words you can easily use to weave very good answers in today's exam. Can I go to something different? Can I go to something different, ladies and gentlemen, kindly? Can I go to something different? Yes, thank you very much. Thank you very much. Thank you very much. Now, ladies and gentlemen, here we are. Look at question number 115, tire company. Tire company, they want us to give them the audit procedures and the actions that you should now take in respect of the above matter. In respect of the above matter, those things of a review, those things like analytical, whatever, those things, these are the kind of things, simple things, right? So, ladies and gentlemen, there are many different types of accounting estimates in the financial statements. Describe the audit procedures required in respect of accounting estimates. Question, audit procedures required in regards to accounting estimates. Mnazijua kweli? Tuanze na B kwanza, pole pole kabla tuanze kureview question. 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 Accounting estimates. Accounting estimates. What is the kind of work that I will be able to do as an auditor? What we call in this case here, audit procedures required over accounting estimates. They're not talking to me. 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 Analysis, analytical. Okay. Okay. Calculation and recalculations. Yeah, this is quite important. I like Cynthia, what you're telling me. Inquiries, get to know how the management, in this case, ladies and gentlemen, did. Yes, thank you very much, Ruth. When they talk of audit tests like that, these are the kind of things I'll be thinking about, right? Right. Now, let's read the question very fast. One of your audit clients is tire company, a company providing petrol, aviation fuel, and similar oil-based products to the government of the country it is based in. Although the company is not listed on any stock exchange, it does follow best practice regarding corporate governance regulations. The audit work for this year is complete, apart from the matter referred to below. As part of tire company service contract with government, it is required to hold an emergency inventory reserve of 6,000 barrels of aviation fuel. The inventory is to be used if the supply of aviation fuel is interrupted due to unforeseen events such as a natural disaster or terrorist activity. This fuel has in the past been valued at a cost price of $15 a barrel. The current value of aviation fuel is $120 a barrel. Although the auditor's work is complete, as noted above, the directors of tire company have now decided to show the real value of this closing inventory in the financial statements by valuing closing inventory of fuel at market value, which does not comply with the relevant accounting standards. Remember, accounting standards and gentlemen, as pertains to inventory IAS 2. Inventory IAS 2, we should value inventories at the lower of cost and the net realizable value. At the lower of cost and the net realizable value, right? They can never allow you, ladies and gentlemen, in terms of inventory, you cannot come and start telling us that you are revaluing inventory. You'll be able to use, ladies and gentlemen, that revaluation here to really derive incomes out of inventory, which is wrong, and you may not be able to sell. Remember, when you overstate your closing stock, automatically closing stock is an income, kind of. When you overstate your closing stock, your profits will be overstated. So people will be able to play around with the profitability, right? So the standard, International Accounting Standard 2 tells us that when you want to look at your inventory value, you'll ask yourself two questions, right? You'll ask yourself two questions. In this case here, what is the cost? This thing cost me 10 bob. Number two, what if I'm forced to sell it today? What is the net realizable value? Maybe the net realizable value is 4. So you look at the two and choose the lower. You choose the lower because we don't want you to overstate your incomes. Now, ladies and gentlemen, we are told here, yes, value, which does not comply with relevant accounting standards. The draft financial statements of tire company currently show a profit of approximately 500,000 with net assets of 170 million. So of course there is materiality there. So they want us to list the audit procedures and actions that you should now take in respect of the above matter. So we have 6 marks. So we expect you guys to give us like 3 paragraphs, very well explained paragraphs really. Not 6 points ile ya kusema 6 points ya dash kidogo utaanguka. So wacha kidogo tupate breather. As we get a breather, we are expecting students here to type. Please, you could type kwa keyboard yako, si ujinga. Is trying in this case to become party to really this particular food that we are cooking this morning. Kazi yako si ati kuchukua answers. We don't even want you to be writing quite a lot. No. Okay, so what do we have there? Somebody talk to me. Imagine hawaniongeleshi. Mimi nakwambia hapo, mimi nitaongea vitu mingi. Sijui kana vile mimi napenda kuongea sana. Hapo hai. Tena ni vitu tu za ujinga tu. Vitu za ujinga kabisa. For example, there is a materiality calculation which I'll have to do. I'll talk of a review of previous year working papers. If I was the auditor, I'll simply pull that file, right? Even if I wasn't the auditor, I'll simply ask for that file. So I have to review what happened last year. Very, very important, ladies and gentlemen. There is this point that you must always be talking about. When you talk of audit procedures, ladies and gentlemen, in terms of an inquiry, I'll have to discuss with the directors, right? I'll even warn these directors, I'll warn the directors over a possible qualification, right? I'll have to document something, like put something down as an auditor, ladies and gentlemen, and give it to these directors, like through what we call a management representation, right? So, ladies and gentlemen, I would want us to go straight away to the question answer. We look at the answer here, that is 115. Great. So 115, we are given the answer here, the proposed valuation of inventory. Valuation of inventory. Hapo kwanza namuingia tamwambia nilifunzwa na Aura about IS2. Yes. So in this case here, identify. That's a procedure. Identify the relevant section of IS2 which prohibits the valuation of inventory at market value. IS2 requires that inventory should be valued at the lower of cost and net realizable value, and ensure that there are no exceptions permitted by the standard. Number 2, calculate the magnitude of the misstatement. Magnitude of the misstatement, which is clearly material in the context of the results of the year, which is $500,000, right? Remember, this thing is worth 15, and they want us to revalue it at what year? At 120. So that difference times the 6,000 barrels is 630,000. This is quite a huge figure if you look at the profits that we have. 3, ask the directors their reasons for wanting to value the inventory. In this, of course, the major reason here is to increase their profits. Of course, they would want, for example, to borrow, right? So they want to take this thing to the banks, right? 4, point out the directors that the treatment is incorrect. The misstatement is material, and any opinion on financial statements where inventory is valued in this way will be qualified, right? Right? Review findings of last year to establish treatment in the past, and if this has occurred before, how it has been dealt with. How it has been dealt with. So, ladies and gentlemen, remember in your RAEOU, inspection of documents is something that is quite important. Something that is quite important. So I have even to get, in this case here, for example, if they did some valuation, for example, if there was an expert involved, I have to get, for example, that document from this expert, even go further to see whether that expert is competent. Is he registered as a member of their professional body, right? So we are told here, if the directors refuse to change the treatment, draft a suitable qualification. You draft a suitable qualification and of course share it with the management. Remember, as an auditor, sisi si watu wa kufanya vitu kitoto. Atunastukia management, mara ya mwisho namwambia nimekupatia qualified or no. We must take these guys through the process. Explain to them the impact of our disagreement, right? Should they, in this case here, agree to make changes, you don't really issue a qualified report. The thing is to help a company, Now, the audit procedures in respect of accounting estimates, mkaniambia, inquire of management how the estimate has been arrived at and evaluate whether the assumptions used are reasonable. Review the judgment and decisions of management in making the accounting estimates to identify if there are indications of possible management bias. Develop a point estimate or range with which to evaluate the reasonableness of the accounting estimate made by the management. test whether controls over development of management estimates are operating what year effectively. And of course, now this one coupled with what you guys had mentioned, I wanted to, so top tip, 4 well-explained procedures were needed. Some more valid ones are obtain written representations from the management that they believe the significant assumptions used are reasonable. Perform a recalculation of the estimate. Compare the estimate with the expectations and the prior year estimate and investigate any variances. For accounting estimates that give rise to significant risks, evaluate the adequacy of disclosure of their estimation and certainty. So have they given us a note, the disclosure note down there? Obtain sufficient appropriate audit evidence whether the disclosures are correct. Evaluate whether the accounting estimates are either reasonable or what year misstated. So ladies and gentlemen, can I go to something different? 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 Thank you very much. Can I go to something different? Now, corporate governance is an area that is quite important, ladies and gentlemen. Look at this short question required here. Explain the actions that the board of directors of North Sea Company must take in order to meet corporate governance requirements for the listing of North Sea Company. Explain why your audit firm will need to communicate with North Sea's audit committee for this and the future audits. Explain why your audit firm will need to communicate with North Sea's Company audit committee for this and the future audits. So nakwambia hapa juu, you are the audit manager in the audit firm of Duck and Company. Woi, ukita kampuni hivyo, hiyo itaanguka kusema ukweli Duck. One of your audit clients is North Sea's Company, a company specializing in the manufacture and supply of sporting equipment. You are now planning the audit for the year ending 31st December 2017. Following an initial meeting with the directors of North Sea, you have established that North Sea plans to obtain a listing on a recognized stock exchange. The directors have established an audit committee as required by corporate governance regulations, although no further action has been taken in this respect. Information on the listing is not yet public knowledge. So A, explain the actions that the board of directors of North Sea Company must take in order to meet corporate governance requirements for the listing of North Sea Company. Oh yeah, so utasema nini kwa hii? Utasema nini kwa hii? Oh yeah, please talk to me. Utasema nini kwa hii? Oh yeah. Oh yeah, oh yeah. Utasema nini kwa hiyo? Kuna vitu ambavyo unafaa kuwa unajua current things za corporate governance. We have money laundering, the things you're supposed to be knowing. So please talk to me. Please talk to me. Utapata mwingine anakuambia sasa tunajua hii haiko kwa sela. Unaona yuko past paper yako ya maswali ya corporate governance. Maswali mengi sana ya corporate governance. Maswali mengi sana ya corporate governance. Nyangiri ameongea kitu hapo kabisa. Independence of the audit committee, asante. Mwangi. Find out whether there is a sound ICS at North Sea. Mary, I like how you're mentioning the name of your company. Operationalize the audit committee. By the way, hapa ndio wanafunzi pia mnafanyanga makosa, because sasa hapa nyinyi mmeanza kujirestrict kwa nini? Kwa audit committee peke yake. And yet part 1 really is not all about just audit committee. Explain the actions that the board of directors of North Sea Company must take in order to meet corporate governance requirements for the listing of North Sea Company Limited. So talking about examiner amekudanganya hapa tuna jina audit committee, right? So what kind of things am I looking at here really? What kind of things am I looking at here? Carry out value for money audits, not really. Check on environmental system, not really. Not really. And remember here you are reasoning like directors. You've been told here to explain. These are your simple things. Here basically they are testing on the concept of the pillars of corporate governance. If I would want, in this case here, RCM Online College to stand even after I go away from this world, right? There are those key columns, the key pillars that I need. So at the board level, there is no way I can go to Capital Markets Authority and seek for listing of RCM Online College if the chairman of the board and the CEO of the company roles are being executed by one person. That one automatically is weakness. So we are saying that the first thing that these directors must ensure is that the CEO and the chairman of the board roles are being executed by two different people. That is very important. The other pillar, ladies and gentlemen, is the pillar of internal control systems and risk management. Kama una internal control systems and risk management well documented, then there is no way Capital Markets Authority will be able to take up even your case for purposes of review, for purposes of what you're listing. Right? Right? There is the concept of what here? The concept of the board being balanced. Is it the board being balanced between women and men? No, it's balanced between executive directors and non-executive directors. Right? Ladies and gentlemen, these people must always also be very nice in terms of what here, analyzing the stakeholders of the company. If you would want this company to continue in the foreseeable future, then we need, through what we call Mendelow's model, we need to analyze the stakeholders that we have. And there are those stakeholders who can never be ignored. For purposes of not having going concern issues in the future, we have stakeholders we call institutional investors. Like if Kenya Airways never had institutional investors like the government, like serious banks, by now KQ haingekuwa. But because of institutional investors who are able to really come through in difficult times, the company is there, right? So these are your normal points, ladies and gentlemen, of corporate governance. And I know you guys are experts of corporate governance. Actually, I should not even talk more on this subject because you guys are much better than myself. Okay. We shall overcome. Hiyo jina yake ilikuwa inaitwa North what? Oh yeah, North Sea. Just a minute. Such a jina, your 80s all over. North Sea, yes. Great. North. Great. So be taking me now to the answer straight away. Great. So North Sea, ladies and gentlemen, is here with me, the answer. So you can see the action required to meet corporate governance requirements. The company should appoint a chairman and a chief executive officer for its board of directors. And these must be different people with clear divisions of responsibilities so that no one individual has got unfettered powers of decision. Remember, what kills these organizations, ladies and gentlemen, is basically having people running the show themselves. Like, is there anybody here who can imagine Equity Bank without James Mwangi? Is there anybody who can imagine Equity Bank without James Mwangi? He has got unfettered powers. Even if the company is registered in CMA, if you ask me, he's all over, right? Right? That's very wrong. That's very wrong. I'm so sure even in the board is so much domineering, right? The company should appoint a mixture of executive and non-executive directors. That is very important. The company should set up an internal audit department, which can review its internal controls and risk management procedures. The company should establish remuneration and nomination committees, right? There should be a terms of reference document. Great. So, ladies and gentlemen, that is one of those things we want to compare to high level, corporate governance, high level like risk management, internal control systems. Of course, you know that the biggest internal control system is to have an internal audit department. So thank you very much. So if you allow me, I'll go back very fast and read. If you allow me, I'll go back very fast and read part B. Explain why your audit firm will need to communicate with North Seas companies audit committee for this and the future audits. Why should your firm of auditors, ladies and gentlemen, talk to the audit committee of North Sea? Ladies and gentlemen, remember, as you guys told me from the word go, you told me that the audit committee has got some angle of independence from the firm. It is comprised of non-executive directors, right? Audit committee. So I would want to talk to this audit committee, ladies and gentlemen, number one, because that is what is required of me as an auditor, that I should speak to the entire company through the audit committee, right? I would want to speak to the audit committee, ladies and gentlemen, because remember, those guys are independent, and myself as an auditor, I'm also independent. I'm so sure that these are the people, even once I get to the firm, I'll be told that these are the people you should be dealing with, right? Remember that even one of the members in the audit committee is required here to have some financial knowledge. Usiende kwa watu wengine hapa na pale, utapata shida mingi sana. You know, they've got interests. So the audit committee's independence, given in this case, what is required of me, I should be talking to the audit committee, because after all, these are the people that will be connecting, right? These are the bridge between myself and the company. So if I want information about this, it is these guys I talk to. So I would want to deal with them because of their independence, because of their qualifications, their job description. So North Sea, I would just want a high level to read the answer there before I tell you what we shall do next in terms of business risks. So we are told communication with the audit committee. DAC must communicate with North Sea's audit committee for this and the future audit, so that the external auditors are reporting their findings and recommendations to a set of people which consist of independent element in the form of non-executive directors. The audit committee also provides a means for the external auditors to communicate with the company, and raise what here issues of concern. Hapo mesha pick kitu ya maana hapo, kwamba I'm talking to these friends of mine because they're what independent. I'll be able to add so many things because I know that one of those members understand the auditing or even accounting language, etc. So can I go to something different? Claire, ameweka mkono juu. Claire, what I would want you to do is to simply do what, leo kuna watu wengi sana kwa meeting. Perhaps if you could, if you don't mind, Claire, andika swali yako chini. If you don't mind, andika swali yako chini. So nataka tuende kwa auditors reports. Before niende kwa risk assessment, ningetaka nikuje kwa auditors report, review and reporting, and I would want to go straight away to mine. Limited, or this ZDM. Let me see the one that has got good things there. So Z. ZDM. Great. So they have given us very good things here, touching on the subsequent events, and of course our reports. So they want us to explain the auditor's responsibility in respect of events after the reporting period, according to ISA 560 subsequent events. Explain the audit procedures that should be carried out with regards to event 1 and event 2. Event 1 and event 2. So, ladies and gentlemen, when we talk of subsequent events, what comes to your mind? What comes to your mind? What comes to your mind when we talk of subsequent events? What comes to your mind? What comes to your mind when you talk of subsequent events? What comes to your mind? What comes to your mind? What comes to your mind when we talk of subsequent events? Aki hawa niongeleshi, mimi sijui nitawafanyaje sasa. Hawa hapana ongea na mimi, hawajui maana ya helicopter revision. Helicopter revision. Lakini wanaweza kuwa wanakosa kujua maana ya helicopter revision because most of them, this is the first time they are studying with this mwalimu at RCM. RCM College ndio the only one najulikana kwa mambo ya helicopter. Kwa mambo ya helicopter. Subsequent events. You can't talk of subsequent events bila kusema adjusting and non-adjusting, right? Great. 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 Thank you. Now, ladies and gentlemen, when we talk of subsequent and rather subsequent events, ndangalia kitu ya adjustment, overview, general, just the general information, the subsequent events. We've come here to the year end. These are the end of year financial statements have been provided. So these guys, for example, have told us at the end of the year, they've given us receivables over 300 million. And then these guys are able to give us their financial statements, of course, here, a period, maybe January, February. When they give us, ladies and gentlemen, in this case here, these financial statements after the year has ended, there are things that we shall discover ourselves here. Maybe we'll take, like, say, 2 months to do our auditing, something like that. There are things that we'll discover in this period. So, for example, in this particular period, one of the receivables, one of our debtors gets bankrupt. When one of our debtor gets bankrupt, it's subsequent. One of the debtors who owed us 50 million gets bankrupt. So the question should be, this particular debtor who has become bankrupt, this event, is it adjusting? Should we adjust or don't adjust? Adjusting or non-adjusting? Mwengi amesema adjusting, ata-adjust. Thank you very much. Hiyo ni adjusting. Kwa sababu gani? Kwa sababu mtu hauamuki hivi, unakuwa bankrupt out of nowhere. Kwani ni uchawi? Bankruptcy is a process. Trust you me, this guy was become bankrupt here, lazima ilianzia hata maybe 2-3 years ago. So it means that by the time we were doing these financial statements, this guy was also struggling. So this one has to be adjusted. It's an adjusting event. How about, for example, tukiendelea namna hii, ngamwaya inatokea. Yani, kuna kuja, for example, moto mbaya inachoma factory zetu zote. So kumbuka, hapa ulikuwa na property, plant and equipment. Property, plant and equipment, for example, ilikuwa ni 500 million, right? And the factory that has been burnt down this time around, for example, it's worth, say, 100 to make our work easier. So should I tell, in this case here, the directors to go and adjust their PPE to 400? And really, this condition that has happened here, this event that has happened here, ladies and gentlemen, was not or rather, the factory was there at the end of the year. The factory was there at the end of the year. Imechomeka after. So this one here will be called what year? Non-adjusting. Thank you very much. I hope that explanation helps. That explanation helps. And then now, right, the camera now goes off like that. So ladies and gentlemen, then let's read the question again very fast. Let's read the question very fast. So we are told here, the date is 3rd December 2018. The audit of ZDM company is nearly complete, and the financial statements and the audit report are due to be signed out next week. However, the following additional information on the two material events has just been presented to the auditor. The company's year end was 30th September 08. Event number 1 occurred on 10th October. Are you able to see that 10th October 08 is coming after this? It's coming after September. It's coming after our year end. It's coming after our year end. The springs in a new type of mattress has been found to be defective, making the mattress unsafe for use. Ile mattress mzuri kuna ma springs namna hii. So there have been no sales of this mattress. It was due to be marketed in the next few weeks. The company insurers estimate that the inventory to be valued of 750,000 has been affected. The insurers also estimate that the mattresses are now only worth 225,000. There is quite a lot of write-down to be done here in accordance to IS2. No claim can be made against the supplier of springs, as this company is in liquidation with no prospect of any amounts being paid to third parties. The insurers will not pay ZDM for the fall in value of the inventory, as the company was underinsured. All of this inventory was in the finished goods store at the end of the year, and no movements of inventory have been recorded post-year. Event number 2 occurred on the 5th of November 2018. Production at Sam Eve factory was halted for 1 day when a tractor carrying dye used in coloring the fabric on mattresses reversed into a metal pylon, puncturing the vehicle, allowing dye to spread across the factory premises and into a local river. These guys are very bright. Who can tell this concept now? The environmental agency is currently considering whether the release of dye was in breach of environmental legislation. The company's insurers have not yet commented on the event. So explain the auditor's responsibility in respect of events after the reporting period according to ISA 560 subsequent events. I'll be able to pick the 3 marks, are not very many. So here, if I talk of 2 points or even 3 points, and then I elaborate them very well, then I should be able to get all the marks. So could you, ladies and gentlemen, please help me there? Tell me in this case here, what do we expect, ladies and gentlemen? Tell me what do we expect there? What do we expect there? What answer shall we give there? Like they are not talking to me. I don't know why. Na vile nitawamiss sasa after wameenda sasa, nitakuwa nikiamka kufunza nani wewe? Nitakuwa na mashida tu sasa. Nitapatanga nani wa kufunza sasa? You know, teaching is a funny thing. Ukikaa bila kufunza hata unaota. The best profession ever. Mimi siongei, naongea story tu zangu nikingoja nyinyi mniongeleshe. I can see 6 people have tried to tell us something there. Check board meetings, review the insurance policy, review. No, you guys mko sawa, lakini sasa kuna kitu amjajua. Provision for contingent liability, kuna kitu pale amjaongea mzuri sana. The auditors, kumbuka question nauliza namna gani? The auditor, wanakuuliza swali rahisi sana hapa. The auditor's responsibility in respect of events after the reporting period, according to this particular ISA. If you go to this particular ISA, ladies and gentlemen, subsequent events, hawaongei kuhusu lawyers, hawaongei hata kuhusu board minutes, wanaongea of very particular things. Wanaongea of very particular things. Wanaongea kuhusu very, very particular things, which I believe CPA Dennis must have taught you. Ni vile umesahau na una panic. You don't know panic. Sasa ukiona hata mimi mwenyewe panic, ama mimi siende kufanya mtihani. Ladies and gentlemen, my duty as an auditor regarding this, that's how you put it, is to obtain evidence. I'm going to obtain evidence of all the events in this case here that happen after the year end. Which would need adjustments. I would want to ensure that those particular events have been adjusted for. They have been adjusted in the financial statements. So I would want to evaluate all those events that happen after the year end, right? Identify which ones are adjustable, which ones in this case here are non-adjustable. The ones that are adjustable, that is my work. I must ensure that the directors are able to adjust. Two things, they're able to adjust. If they don't want to adjust, they should disclose in the financial statements. If they do that, according to ISA 560, then I have to consider the impact of that on my opinion. Very, very important. Right? Then, ladies and gentlemen, remember also on matters of subsequent events, I will need what we call management assurances. I would need a management representation letter. A management representation letter, which in this case here is assuring me that the management has been able themselves to look at what here, all those events. They must put it in writing. They've been able to check all those events, and for sure the ones that have needed adjustment, they have adjusted, or if they have not adjusted, they have disclosed. They have to ensure that they tell me that. They must give me that. Ladies and gentlemen, let's read this very fast. So this is ZDM, right? So the answer is here. ZDM, the answer is here. The answer is here. Wanasema ISA 560 subsequent events requires that auditors perform audit procedures to obtain sufficient appropriate audit evidence that all events up to the date of the auditor's report that may require adjusting or disclosure in the financial statements have been identified. In this case, since the auditor's report will not be signed until the following week, the auditor must perform additional audit procedures for this event. When the auditors identified events that require adjustment of or disclosure in the financial statements, they need to determine whether these events are appropriately reflected in the financial statements. The auditors are required to request management to provide a written representation that all events occurring subsequent to the date of the financial statements and for which the applicable financial reporting framework require adjustment or disclosure have been adjusted or disclosed. Ladies and gentlemen, have I been able to give you a helicopter overview of that? Do you have an idea of what you could really put down if they ask anything to do with subsequent events? If they ask anything to do with subsequent events, do you have a high-level agenda? We call it a high-level agenda in the corporate world. We call it a high-level agenda. So if that is the case, then allow me to go back very fast again, ladies and gentlemen. Allow me to go back to the question here and read. So like now here, we have event one. They want us to explain the audit procedures that should be carried out with regards to event one, event two. So event one occurred on 10th of October 2008. Now those things you guys were giving me now will come here. The springs in a new type of mattress have been found to be defective, making the mattress unsafe for use. There have been no sales of this mattress. It was due to be marketed in the next few weeks. The company's insurers estimate that the inventory to the value of $750,000 has been affected. The insurers also estimate that the mattress are now only worth $25,000. No claim can be made against the supplier of springs, as this company is in liquidation with no prospect of any amounts being paid to third parties. The insurers will not pay ZDM for the fall in value of inventory, as the company was underinsured. All of this inventory was in the finished goods store at the end of the year, and no movements of inventory have been recorded post-year end. So then explain the audit procedures that should be carried out with regards to event number one. So akiuliza swali kama hii, first of all, I know as an auditor, I'm not working in a vacuum. I'm working with people, and the first people to think about are the management. I would want the management to put in writing to explain to me what is not happening. So I would request for a management representation. I can be able to see other stakeholders there. I can circularize the insurance company which is there. Right? Even wasikize nyinyi hapa sasa, there are figures involved, right? There's some analysis to be done, right? There are documents involved. So there is some inspections to be done. Anything that you say here will be correct. Anything that you say here will be correct. Whatever document you ask for. Hata ukikasirika hata uende mbali kabisa useme unataka kuangalia LPOs, how are these things procured? Anything that you say here, any mambo ya moshene tu, anything you say here, so long as you keep the wheel rolling, you will be correct. You know, CASNEB has done something very nice. They have introduced this AAA and the advanced taxation to be optional papers. Which paper do you think will be very popular moving forward between AAA and the advanced tax? Which paper do you think will students in this case here be opting for? Will be choosing between the two options? In the future, of course, yourselves are beyond that. If you were asked to come back again, which one would you choose? AAA or advanced taxation, depending on your career aspirations? Tax because of the career, right? Lakini subject tamu mimi najua kwa hizi zote ni AAA, because AAA, unless I want to become a tax expert, AAA gives you quite what is relevant. Ukienda hapa nje ukiuliza unakuwa mtu mwerevu sana. Kama mimi kuna hizi not meetings but interviews nimeattend mingi sana za CEO, sijapata kama nilikuwa nimeattend ya Kenya Airways. Right. That's why I'm making noise in the morning. If I got it, by now I would not be here, right? Ukienda, uko nje, you'll be able to express yourself in a way, jamaa unashangaa jamaa alijua hivi vitu zote namna gani. Mambo ya business risks, mambo ya environment, pestel, etc. It's a very applicable paper, yes. Thank you very much. So event number one, what are the kind of the things, ladies and gentlemen, are you guys thinking about for event number one? Audit procedures. Please tuende haraka haraka. And then please, this class, if you don't mind, will go on up to around 7. The students will be going to their examination centers. Please, I would request that you put your headphones on. Unaenda ukitembea nazo ama namna gani? Wow, Felista. So it's something I need to develop. Ananiambia mwalimu uko na sound kama ya radio presenter. Thank you very much. Felista has made my morning. Great. So great. So ladies and gentlemen, what things are we saying there? Hapa kuna ma discussions, kuna ma obtaining, kuna ma review. kuna looking at the impact of the disagreement on my audit work. Kuna kushtua directors unawaambia, you know what, you guys, you're joking around with inventories. I'm going to disqualify. I'm going to qualify my opinion, and I'm so sure this will really affect you in the market, right? Letter of representation, yes. Lazima wajitetee. Na sababu kumbuka evidence, internal evidence, ikuangi very reliable, so let it be in writing. In future mkienda kotini, utazitoa. I like Felix saying, obtain documents from the insurer. Obtain documents from the insurer. I have to look at the insurer's report. Asante sana. So if you allow me, how about event number 2? Ndio tukisoma answer tusoma tu answer mara moja. Event number 2 is about this tanker that came and spilled some dye. So work could not go on. Work could not go on. Kwanza kitu amu kuniambia, hii kitu ya mattress, what do you think of it? Is it adjusting or non-adjusting? Is it adjusting or non-adjusting? Hii kitu ya mattress, is it adjusting or non-adjusting? Is it adjusting or non-adjusting? Ya mattress. Trust you me, wakati inventory zako zinaanza ku lose value, ikuangi sana sana a one-off event. Zinaanzanga mbali sana. Hiyo inafaa kuwa namna gani? Somebody wacha tuone, hiyo inafaa kuwa namna adjusting straight. I'll ask these guys to adjust. If they don't adjust, that is automatically disagreement. And when you disagree, of course, there is a qualification. Watakula red card. Red card, I will give them, reflect the, very good. Now, thank you very much. How about event number 3? Kitu ya die. You, of course, non-adjusting. But what are some of the audit procedures that I will carry here? Audit procedures that I will carry here. 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 Zinafanana zote hizi vitu. Mambo ya ma review. Kama kuna any amended financial statements, I have to review. Obtaining written representations. I have to inspect reports from this government agency, which is equivalent to NEMA. Kuna discussions, because we said under RAEOU, inquiry inamaanisha nini? Right? You inquire from directors and any third parties, even circularizing the insurance company, right? Even getting that driver to talk to him, right? There are things I'll be forced to even go and observe, right? Right? If they tell me that there was this particular amount of loss, they have been able to get, in this case here, the figures down there, I'll want to recalculate myself because I know that this world is made up of very bad people, right? Those are the kind of things, ladies and gentlemen, that you talk about. Hii unakuwa too easy. Ukienda kwa exam unakuwa easy. Sasa unajua problem ya auditing and assurance, just like leadership and management, utapata problem na wanafunzi wana panic sana. Alafu unajua kuna subjects, ladies and gentlemen, ambazo zinataka unaenda kwa exam with this kind of a face. Acha nikuambie siri hapa. Unajua kuna faces mbili unaweza ukavaa. Hata ukitoka tu hapo kwa hiyo kiti yako sasa hivi ukienda kazi exam, utapata mwanafunzi yeye out of and to hivi, unaona sasa huyu utapita mtihani kule umekunja mdomo namna hii. Ladies and gentlemen, hii ni paper ambayo inataka hata sasa zingine unasoma tu kama unasema, hata kama uelewi chochote, you will go places, yes. Hata kama uelewi chochote. So usitoka kwa nyumba kama umenuna, hapana, nasema this day you command your blessings in the morning. This day will be good. After this exam, I'll come out of this exam smiling. Namna hiyo. Sababu ni paper ya kujiongelelea. No. Unapotoa case pale, unasema inspect this document, talk to this person, do this and this. Iko shida gani unaweza hii. Unapata mtu ametoka, huwa anahurumia sana. Nikiwa ni vigilator, huwa anahurumia sana. Unapata mtu amekuja na mapanado kwa mtihani, anakunywa hii. Kwani kitu ni nini? Kama kuna mzee mmoja hata ilibidi nimuite, nimcancel. Huyu mzee yeye nilimpatia karatasi ya AFM. Ile siku nilikuwa kijana mdogo, nilikuwa nafanya invigilation. So kumwekea karatasi ya AFM, sasa sijui kama ni kala ya hiyo karatasi ama ni harufu, ikaanza makalamu zote chini. Na nimani kiwezekana Casneb maybe in future, lakini the offices are very nice. the examination center at Kasneba are very nice. Hizi viti za wanafunzi na kanga zimekaa hivi kwenda chini, hazikuwa appropriate kwa wanafunzi kufanya exam. So jamaa karamu chini, nikamwokota nikampatia. Kumpatia calculator tena pande ile nyingine chini. Kumwangalia forehead ni jasho. Na ni mtu ambao ni mkubwa hata kunishinda. Nikamuita nikamwambia, wewe namna gani mzee? Is it a must that you have to pass this paper? Is it a must for you to pass? Is it a must for you to pass? Is it a must? 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 Nancy anasema, yes, I have to pass. Yes. Yes. Considering the timelines. Yes. Yes. Sasa wacha niwaambieni kitu fani. Nyinyi hapa, au anasema yes, 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 nawapenda sana, lakini nyinyi bado ni wadogo. Nyinyi miaka yenu ni kidogo. In this world, hakuna kitu kama must. There are two options. It is either you pass, it's an exam, or you fail. It's either you pass or you fail. And if you fail, so what? Hakuna timelines. Kitu hakuna timelines. So if you fail, so what? I mean, I'm not wishing you to fail. The concept is, I have to go to this exam having an open mind. Nikijua kwamba this is just a normal thing. It's just a normal thing. Right? Right? Because once you mistake, ukasema, I must pass. I must pass. Alafu ukienda upata a very rough examiner kama mimi, for example, mimi ile siku nilikuanga siku hizi nimezeeka. Question number 1, unasoma, unashangaa kama ni audit ama ni home science. Unaenda question number 2, ukisoma, unashangaa hii geography, right? Unaanza kupanic, right? Ukipanic straight away, utaweza kuona kama question 3, question 4 ni right? Rahisi. So you must have that really open mind, and you must be very confident. Of course, I'm going to pass, yes, but there is a possibility, regardless of how exams are going to be hard. First of all, najua mimi nimekuwa na mwalimu mzuri sana. What of some students who have not been having the teachers down there, right? Ikiwa ngumu ni ngumu kwangu peke yake kweli? Hapana, ni sisi wote. Right? Actually mimi nikiona paper ni ngumu kwanza naangalia kando. Nikiona hakuna mtu anaandika nasema hapo sasa, vile msichana anasema sambusa kidole. Sasa hapo naanza kuimagine scenario. Who are in the environment? I can see there is an insurance company. In this case here, I would want to talk to them directly. I don't want hearsays. I can see in this case here, there are other stakeholders around. What do? I know there are documents that in this case here would want me to inspect. Right? I would want, if it is those mattresses, there is an observation to be done. I don't want to be cheated. Some people will tell you that mattresses are in the store, and maybe I would want to observe myself. I would want, in this case, even to sleep on one of these mattresses here to really experience the springs firsthand. Those are the kind of answers we want. Make the examiner happy, right? Yeah, it's a normal thing. It's like just tossing a coin. It's a normal thing. Now, ukienda with that kind of an attitude to an exam, utapita. Sababu exam ya Kasne, by the way, wewe si kuna exam ushafanya mingi sana ukaona utaanguka lakini ukapita. Exams za Kasne are all about measuring what your confidence. Wewe sasa acha nikuje nikupata sasa kwa exam ya leo, unapata mwanafunzi yani amechafuka hata roho bila anaona tu karatasi. Mara ndio ameanza kujikuna. Unasema utapita. Inakuwa shida. So event number 1, the following audit procedures here should be carried out. Inspect the insurer's report to confirm the value of an inventory that is affected and to confirm the valuation of this inventory as a result in their mattresses. If any of the defective mattresses have subsequently been sold, agree the amount to the supporting documentation and to the bank. Mbona kitu kama hiyo? Right. Next, discuss the issue with the directors and inform them that the financial statements here should be adjusted to reduce the value of year-end inventory to 525,000. Obtain a written representation from management as to the value of inventory at the year-end. Next, review the amended financial statements to confirm that the inventory write-down has indeed been made. If the directors refuse to make the necessary amendments, the audit report may need to include a qualified, except for, opinion on the grounds that the financial statements are materially what you misstated. Now, this is a student who is so good. The student is able to demonstrate a broad and a deep understanding of the subject. Paka ameweza kuongea kuhusu impact on the opinion. How about this kilori kilimwaga dye? This is what I will do. So tunasema inspect any reports from the environmental agency as to whether the release of dye was in breach of the legislation and the outcome of this. Discuss the issue with the directors and inform them that the financial statements will need additional disclosure for this event. Of course, if it's non-adjusting, remember. If it's a non-adjusting, remember. If it's non-adjusting, remember, I'm repeating again for the umpteenth time. If it's non-adjusting event, it must be disclosed in the notes. You don't adjust the financial statements, fine, but tell us that there is a factor that got burned. There is a factor that got burned. Right? Review the amended financial statement to confirm that the disclosure has been made satisfactorily. Even the English used there, some of the disclose. No, I have to see. Next, if the directors refuse to make the necessary disclosure, consider whether the audit report will need any qualification, qualified except for opinion. Mimi nakwambia ukiandika vitu kama hizi kwa exam, nakwambia examiner atakupatia 5 marks out of 3. 5 marks out of 3. 5 marks out of 3. Great. Now, ladies and gentlemen, I would want us to go to something different with your permission. With your permission. So, what are the key audit procedures, ladies and gentlemen, ambao umepick ambao utatumia leo? Ni gani zile ambao umepick ambao utajua leo lazima, sababu lazima uulize swali ya audit procedures. Ni gani ambao umepick ambao utatumia leo? Hebu andika mbio mbio. Ni gani umepick ambao utatumia leo? Ni gani umepick ambao utatumia leo? Ni gani umepick ambao utatumia leo? Ni gani ambao unasema leo kusema ukweli hii lazima ilale kwa hiyo karatasi? Kwani iko namna gani? Iko namna gani? Iko namna gani? Requiry inspection. So you think around this analytical analysis, review of great. Hata sitaki hata kuendelea sana. Thank you very much. Thank you very much. Thank you very much. Thank you very much. Now tuko na mine. Hapo walikuwa sasa ifai kuwa minie, ifai kuwa mine, ifai kuwa mine. So explain the term misstatement and describe the auditor's responsibility in relation to the misstatements. Right? You are the audit manager of Duffy and the company, and you are briefing your team on the approach to adopt in undertaking the review and the finalization stage of the audit. In particular, your audit senior is unsure about the steps to take in relation to uncorrected misstatements. During the audit of many company, a number of uncorrected misstatements have been noted. Explain the term misstatement and describe the auditor's responsibility in relation to the misstatements. Mimi nakwambia hata kama sielewi. Kwanza kitu ya kumiss. Umemiss vitu ngapi kwa hii dunia? Right? You expected this, but you got this. You expected a good fruit, mtu akakupatia lemon. Right? I'll be able to describe so many things. Siwezi toka bure. Yo max ine tunabambana nayo hapa kwa hapa. Lazima nipate more than 2, ama hata 2. Hata examiner wa kasi nebusi hata hataki upate mingi sana. Hizi pass marks zinakuanga kidogo sana. So what is a misstatement? What is a misstatement? What is a misstatement? Please move with speed, move with speed. Time is not on our side. Move with speed. So a misstatement, ladies and gentlemen, is basically a variance. In kama AMA, it's a variation. A variance between what and what? A variance between the actual and the expected. So for us in auditing, remember, or even in financial reporting, a misstatement will be the difference between amounts, for example, that are actually put in the financial statements and what we expected. Differences between, for example, classifications. We expected you to classify this thing like this. Umefanya vitu zako opposite. Right? You'll be able to see the answer right away. So how about now the auditor's responsibility? Whenever there are misstatements, please talk to me. Auditor's responsibility, answers zimeanza kwenda chini, answers sio mingi, kumaanisha wanafunzi wameanza kuchoka. Omission of information. Sharon, asante, but you don't rush really to give an opinion like that, unless, for example, talk about a draft opinion. Talk about draft opinion. Sharon, sitaki nikufunze hapa kesho nianze kusikia umeanza kupatiana opinion tu. Hapana. You must involve these people. You must involve these people. Uno Vincent Sanga ameongea kitu ya maana sana. It's a misstatement. Sisi tumesema kama auditors, hataki vitu za wana. Yaani umeona hii ni kampuni ya mamilioni. Alafu mtu ameenda amekunywa maziwa ya hoteli. Unataka kwanza such a thing to be reported? No. What is the materiality really? That is very important. Right? Ladies and gentlemen, if there are any uncorrected misstatements, what I'll do, first of all, uncorrected misstatements, those are adjusting. These directors must adjust them. If they don't adjust them, ladies and gentlemen, I'll be able to tell them that I will have to report this in my report. Right? I'll have to tell these guys here, if you are saying we continue with this, could you kindly put whatever you're telling me in writing? Give me a management representation for my filing, even for future reference as a working papers. Right? 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 Ladies and gentlemen, uncorrected errors, uncorrected misstatements. I have to do my own computations. So recalculations comes in handy, right? Right? But most importantly, I can see very many new comments here. Yes. Identify whether these misstatements are factual, judgmental, or projected. The extent is material. Okay, thank you very much. Now, ladies and gentlemen, allow me to look at this very fast. The answer, it's called Minier. It's called Minier. It's called Minier. It's called Minier like this. Great. Life is good. Minier, yes. Now, when you look at misstatement, they're telling us it's a difference between the amount classification, presentation, or disclosure of a reported financial statement item and the amount, classification, presentation, or disclosure that is required for the item to be in accordance with the applicable financial reporting framework. It can arise from error or fraud. Kama ile swali yako ya pilot paper. From error or what here? Fraud. Now, ladies and gentlemen, the most important thing to me here is this. As part of their completion procedures, auditors must consider whether the aggregate of uncorrected misstatements in the financial statements are material, having considered the size and the nature of the misstatements. Uncorrected misstatements and their effect must be communicated to those charged. There is that communication with governance, with material uncorrected misstatements being identified individually. You need a register. The auditor shall request uncorrected misstatements to be corrected. If they are not adjusted and are considered material, then the auditor will have to consider the impact on the auditor's report. The auditor must also request a written representation from management and those charged with governance, stating whether they believe the effects of uncorrected misstatement are immaterial. And a summary of these items has to be attached to the representation. Ladies and gentlemen, I believe you have gotten, in this case here, some high-level highlights, and I believe you are giving me green light to continue. The following issues have arisen during the course of the audit of Mini company profit before tax in year 10 million. Kuna materiality hapa. Mini company's computerized wages program is backed up daily. However, for a period of 2 months, the wages records and the backup have become corrupted, and therefore cannot be accessed. Wages and salaries for these 2 months are 1.1 million. Out of the profit before tax, what do you think? Is this amount material? Is this amount material or not material? Is this amount material or not material? Is this amount material or not material? And today I'm so happy you guys are 170. Please make sure that from next semester, you make RCM Online College the most popular online college. Please make references to us. You have our numbers, like that number of 0719 525,000. 0719 525,000. So next year, ensure that Mwalimu is able to come back to teaching 100%. Make sure that Mwalimu will be able to get a salary of 1 million. Anyway, I'm joking, but I'm really making a humble request to everybody here and ensure that you guys market us so seriously. So seriously. Unajua saa wengi mnaenda to very big, mnaenda kwa big brands, these big colleges. Lakini at the end of the day, like what I'm giving you here, amukupata huko. That is why you are here. That's why you are here. Tukiuliza mlikuwa wapi, tusikia mtu amekwambia alikuwa Strathmore University, alikuwa KCA, alikuwa wapi. But now you are here with me, right? So please ensure that we don't have our friends going anywhere. It's RCM Online College, 0719 525,000. Great. Thank you very much. Thank you very much. Thank you very much. Thank you very much. Guaranteed. Thank you very much. So, right material. So look at number 2. Many companies' main competitor has filed a lawsuit. Ukisikia lawsuit, unajua kuna mambo na lawyers. Kuna kuongea na vitu mingi sana. Kuna kureview, in this case here, the court documentations, to see in this case here the progress, for you to be able to really say whether this case, you know, you can tell. Does it have, in this case here, what is the success rate? Is it probable? Probable, right? So many companies, many competitors filed a lawsuit of $5 million against them, alleging a breach of copyright. This case is ongoing and will not be resolved prior to the auditor's report being signed, right? So no problem. Even if you say no problem, but have you disclosed it in the financial statements? I'll have to check the disclosures. The matter is correctly disclosed as a contingent liability. As a contingent liability, I'll still have to look at it. You know, I can only recognize a matter as a contingent liability, ladies and gentlemen, as a contingent liability when it's probable, right? And quantifiable, that for sure we are going to lose, and this amount is most probably going to be paid, right? So describe the impact on the auditor's report if the above issues remain unsolved. So number 1, what do you think of these wages? If you're the auditor, please always put yourself as that big man. Unasemanga bazoo, umekaa kwa ofisi, umeletoa kitu ya misstatement, right? Ya wages. What do you think in this case here will that have, impact will it have on your auditor's report? What kind of a report are you going to? Mimi nakwambia hapo, mimi naweza kudanganya examiner. Namwandikia ma if this, I will do this. If this, I will do this. Nevertheless, paka examiner anaamua kupatia mark yote. Unampeleka. Siwezi nikaluzi hiyo mark hiyo. So I'm waiting. I can see 7 comments. You guys are good. You are bright. I wish you success. Or can't hear. Are you able to hear me now? Are you able to hear me now? Not sure to break. No. I wanted you guys to write something. I wanted you guys to write something. I want you to describe the impact. I want you to describe the impact. Ukisikia anything to do with a ledger has been corrupted, it means you can't be able to get what your evidence. There is a limitation in your scope. There's a limitation in your scope, right? And this particular item that they're talking about is at about what percentage? 1.1 over 1.1. Sharon, hapa hawajakuambia useme. Thank you, Sharon. Lakini kumbuka hawajakuambia useme the audit procedures, Sharon. Hapana. You know, you must mention this 11% in your answer. Materiality. This is so material, right? This is so material. 11% is so material. 1.1 over 10 times 100. So 11% is material. But what do you think of this item? Is it really pervasive? Is the item like a pavada? Is it affecting most of the things in the financial statements? Wages. I think wages is a one-liner thing. It's a one-liner thing. You know, something like sales is very bad because sales, itakuwa na impact kwa receivable, itakuwa na impact kwa provisions, right? This is a one-liner item. It's material fine, but one-liner item, right? So in this particular case, ladies and gentlemen, then, which kind of opinion am I going to give here? Can I give a disclaimer because it falls under limitation of scope? I could have only given a disclaimer, kama ni pervasive, something very absurd. When I come to your organization and then you tell me that the accounts department has been burnt down, then that is quite absurd, right? So ladies and gentlemen, here, I'm going to give what we call a qualified except for. Thank you very much. It's a qualified except for, right? And when you give a qualified except for, remember as an auditor, you must have another paragraph, what we call basis of the qualification. It's a one-line expense. Thank you very much, Felix. It's a one-line expense. Hata kuna ja kusoma sana, tuende hapa. Nyinyi ni werevu sana. Nyinyi ni mwapenda zaidi. Please don't forget that we have a get together. Lakini wanafunzi hawajakubaliana na date ya get together. Ni vizuri tupatane tujuane. I would want to place a name, or rather a face to your names. I would want, ladies and gentlemen, to place a face to your names. It will be very important for us to get to know each other. So, computer wage records. The corruption of Mini's wages program has resulted in 2 months of wages data being lost. If Duffy and the company are unable to verify the wages data for these months using alternative procedures, then insufficient evidence is available for the 2-month period. This represents 11% of profit before tax, like that. And there's a material amount, honestly. The effect of this possible misstatement of wages would be material, but not pervasive. As a result, a qualified opinion should be expressed on the grounds that the auditor is unable to obtain sufficient appropriate audit evidence over a material area. Duffy and the company's report will contain a basis for qualified opinion paragraph explaining they were unable to obtain sufficient appropriate audit evidence over the wages expense included in the financial statements due to the corrupted payroll records. The qualified opinion paragraph would state that, except for possible effects of the material matter described in the basis for opinion paragraph, the financial statements portray a true and a fair view. Tuenda hapa kwa lawsuit, to answer direct, lawsuit for breach of copyright. Although legal action is being taken against the company for breach of copyright, the matter has been correctly disclosed in accordance to IAS 37 provisions, contingent liabilities, and contingent assets. The 5 million lawsuit represents 50% of profit before tax, and there is no doubt this is clearly a material matter. No modification of the audit opinion is required because the matter is appropriately disclosed. However, the uncertainty relating to the future outcome of this exceptional litigation is of such importance that is fundamental to the user's understanding of financial statements. Therefore, an emphasis of matter paragraph should be included in the auditor's report. The EOM paragraph will appear after the opinion paragraph and should state there is an uncertainty over the outcome of the lawsuit and cross-refer to the contingent liability disclosure note. The paragraph will state the opinion is not qualified in respect of this matter. Ladies and gentlemen, I would really want to believe that you have understood something there, however small. You've understood something there, however small. And I would want us to take a 5 minutes break, a 5 minutes health break. We'll come back at exactly 6:20. 6:20. Is that okay? And make sure you walk around. Make sure you walk around, stretch a little bit. Grab a cup of tea, bring it closer to your machine. So we'll come at exactly 6:20. Are we back, ladies and gentlemen? Are we back? 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 Thank you very much. So let's continue here. Let's continue here. So we have this question number 60. Question number 60, please take a screenshot. Please take a screenshot. Take a screenshot of this question number 60, right? Right. So, and I would want us to look at part B. Snipe Limited has in place a defined benefit pension plan for its employees, an actuarial valuation. Now here, an actuary is being involved. So as an accountant have to evaluate his independence, have to evaluate his competence. Actual valuation on 31st January indicated that the plan has a deficit of 10.5 million, quite a lot. The deficit is not recognized in the statement of financial position. An extract from the draft audit report is given below. Auditor's opinion. In our opinion, because of the significance of the matter discussed below, the financial statements do not give a true and a fair view of the financial position of Snipes Limited at 31st December 02 and of its financial performance and the cash flows for the year then ended in accordance with the International Financial Reporting Standards. Explanation or basis of the adverse opinion, the financial statements do not include the company's pension plan. This deliberate omission contravenes accepted accounting practice and means that the accounts are not properly prepared. Required, critically appraise the extract from the proposed audit report of Snipe Limited for the year ended 31st January 2002. Just appraise it very fast, very fast. I'm waiting, I'm all eyes. I'm all eyes. Is it good? Is it good? Is it good? Now, in the interest of time, ladies and gentlemen, let's go to the answer directly of this Snipe. Let's go to the answer directly of this Snipe. We go to the answer directly of this Snipe. Control copy. So Snipe is here. The answer is with me here. So wanasema namna hii, najua umepata correct. Najua umepata correct, lazima umeappraise sana, si kweli? Lazima umepata correct. Snipe. Now, ISA 705, modifications to the opinion in the independent auditor's report states that, you don't have to quote these things, states that for an adverse opinion, the report should explain the reasons for the adverse opinion in a paragraph entitled Basis for Adverse Opinion. Here are some explanations. This paragraph is placed immediately before the opinion paragraph. Are we together there? Are we together there? Because adverse opinion is a very serious thing. Express an adverse opinion in a paragraph entitled Adverse Opinion. The draft auditor's report for Snipe Limited does not do this. Both paragraphs are titled incorrectly and are placed in the wrong order. Explanation paragraph. The explanation of the basis for the adverse opinion is not sufficient. ISA 705 states that The matter must be quantified where this is practical. The paragraph should state that the plan is in deficit by 10.5 million. You must always, if it's RCM that has not been able to, as a misstatement, you will say, for example, even if it's an except for, that RCM's financial statements portray a true and fair view, except for the fact that this item has been misstated by this amount. The paragraph should describe the impact of this omission on the financial statements. In this case, it should state that if the deficit had been recognized, then these would increase the total liabilities and reduce the shareholders' equity by 10.5. Reference should be made to the relevant accounting standards, in this case, IAS 19 employee benefits, as this would help improve users' understanding of the misstatement. So for you, you don't have really to know this, but it's important to mention that it's important that we refer to the proper international accounting standards. You can even write that way, those words, international accounting standards, in capital letters. So the wording. The explanation paragraph describes the omission as deliberate. This is an unprofessional choice of words, but more importantly, it's a matter of judgment whether or not the omission is deliberate. You're not a judge. By making this assertion, the auditor leaves himself open to the risk of litigation if the client takes this to be defamatory. Adverse opinion. It is open to question whether the issuer alone would result in an adverse opinion. At 6% of total assets, we never did this materiality, the matter is definitely material, but may not be pervasive. An adverse opinion should only be expressed when the misstatement is both material and pervasive. So I hope that high level umeweza kushika kakitu. I hope your high level umeweza kushika kakitu. So ladies and gentlemen, I would want us straight away to go to something here very important for you. Very important for you, very important for you. Mambo ya business risks. Mambo ya business risks. Yep. Wacha nitafute hapa, control find audit risk. No, I'm getting in the wrong book. Nope. Okay. Great, great. So audit risk, we are talking over 28. Let me go to 46. 46, question number 46. Very important for you, my students. Very good. So here we are. So I would want us to look at part B. As part of your risk assessment procedures for the audit of Serenity Company for the year ending 31st December 2016, identify and describe the issues to be considered when providing services to this client. Explain the term negative assurance and why this is used when reporting on a cash flow forecast. Cash flow forecast, the concept of a PFI, prospective financial information, likufunza sana kuhusu prospective financial information. So we read here together, Marland Company, an audit firm, has 7 partners. The firm has a number of audit clients in different industrial sectors with a wide range of fee income. An audit partner of Marland Company has just delegated to you the planning work for the audit of Serenity Company. This company provides a range of mobile communication facilities, and this will be the second year your firm has provided audit services. You have just met with the financial controller of Serenity prior to agreeing to the engagement letter for this year. The controller has informed you that Serenity has continued to grow quickly, with financial accounting systems changing rapidly and appropriate control systems being difficult to maintain. Additional services in terms of review and implementation of control systems have been requested. An internal audit department has recently been established, and the controller wants you to ensure that the external audit work is limited by using this department. You want to direct my work. You have also learned that Serenity is to market a new type of mobile telephone, which is able to intercept messages from law enforcement agencies. The legal status of this telephone is unclear at present, and development is not being publicized. The granting of the license to market the mobile telephone is dependent on the financial stability of Serenity. The financial controller has indicated that Marland Company may be asked here to provide a report to the Mobile Telephone Licensing Authority regarding Serenity's cash flow forecast for the year ending December 2017 to support the license application required as part of your risk assessment procedures for the audit of Serenity Company for the year ending 31st December. Identify and describe the issues to be considered when providing services to this client. 10 marks. So 5 points, well elaborated, will give you 10 marks. Let me see the kind of things that you guys will be thinking about here. Let me see the kind of things that you guys will write for me there. Let me see the kind of things that you guys will write for me there. What kind of things are you going to write? Tuenda haraka sana, even much higher level. Much higher level. Oh yeah, awaongei sana. Contingency fees factor, scope of work, integrity of directors, financial difficulties, independence issue of the auditor. Now that we have some bully here, now that we have some bully there, now that we've got some bully there, now that we've got some bully there, legality of business. There are so many compliance problems. Ladies and gentlemen, I would want us straight away to go to the answer here and go through very fast. It's called MAL. Oh, yeah. Okay. Serenity. So part B, it's part B here, part B. Now look at this, right? We can start with even from part A. Risk assessment procedures are performed at the planning stage of an audit to obtain an understanding of the entity being audited, right? And to identify any areas of concern which could result in material misstatements in the financial statements. They allow the auditor to assess the nature, timing, and the extent of the audit procedures to be performed. Sources of audit evidence that can be used as part of risk assessment procedures. We have inquiries of management, prior year financial statements is a key source, current year management accounts and budgets, analytical procedures, observation and inspection. Now, poor internal controls and rapid growth. The accounting system of Serenity Company are changing rapidly, and the control systems are difficult to maintain as the company continues to grow. This indicates that the internal controls are likely to be poor. So control risk and risk of material misstatement in the account will be high. Therefore, a fully substantive audit is likely, and Marland Company must ensure it has enough time and resources to obtain sufficient audit evidence to support the figures in the financial statements. Look at how wise this man is. To show you internal controls are not there. This company is growing very rapidly. And because of that, ladies and gentlemen, there is quite a high risk of misstatements. And as such, I'll not place reliance on the internal control systems. So in this case here, I have to do a full substantive audit. Reliance on the internal audit department. So reliance on the internal audit department, Serenity Company has only recently established its internal audit department. So Mao and the company needs to be very careful in deciding whether it can place reliance on the work performed by this new audit, internal audit, and ultimately in a reduced external audit fees as desired by the financial controller. Additional time and the work would be required to assess the internal audit, so an immediate reduction in the fee is very unlikely. Additional services required. Serenity Company requires additional services of review and implementation of control systems, but Mal and Company must consider whether it has sufficient skilled resources to carry out this additional work, as it has a small firm with a number of clients in different sectors. Fee income, the additional work required by Serenity Company will result in an increased fee income to Mal Company. The audit firm must ensure that its fees income from this one client does not breach the guidelines set by ISPAC, the same. This states that the firm fee income from an unlisted client should not exceed 15% of the firm's total fees. Could a self-review risk, self-review threat, the additional work required on the review, implementation of control systems, of course, you should understand, kuna a risk ya legal status of new mobile, it's quite a big risk, right? There is reliance on cash flow statements for license, kuna going concern assumption, a going concern risk because of especially the uncertainties regarding the legality of the things these guys are doing. So I believe you have been able to pick something, ladies and gentlemen, which you can use at least to mention something in your exam. So is that okay? Is that okay? Can I move to something a little bit different? This one on negative assurance. So negative assurance refers to when an auditor gives an assurance that nothing has come to his or her attention, which indicates that the financial statements have not been prepared according to the identified financial reporting framework, i.e. the auditor gives his or her assurance in the absence of any evidence to the contrary. Negative assurance is given on review assignments, such as review of a company's cash flow forecast. A cash flow forecast relates to the future, so is based upon assumptions that cannot be confirmed as accurate. The auditor cannot confirm positively that the statement is materially true and fair or presented fairly in material respects. This is because the conditions assumed when preparing the cash flow statement may not turn out as expected, and it's not possible to gain the level of evidence expected to express absolute. Ladies and gentlemen, listen and listen to me very well here. Listen and listen to me very well here. Remember, we have got our assurance plane, what we call assurance plane. So assurance plane normally goes like this. So we have 0 assurance there. We have 100% assurance there. So we have the mid here. So of course, in this case here as an auditor at 0, I'm not giving any assurance. So no assurance at all. No assurance at all. If in this case here, I'm able to do, ladies and gentlemen, right, audit tests over the entire census, the entire population, and there are no judgments, For example, you come and tell me, in this case here, I would want you to give me assurance that the sheep that I have in my farm are like this. So, counting sheep, really, I can easily give you what we call absolute assurance. 100% assurance. Ni hesabu, nikwambie kwa niko namna gani. Hiyo ni 100%. Ito absolute assurance. Lakini kumbuka an auditor, ladies and gentlemen, normally operates here. As much as I'm required to put in sufficient audit tests here to gather enough evidence, there are so many judgmental things that I will always be involved with. And because of these judgmental things, I can only give what we call reasonable assurance. Why reasonable assurance? Why am I calling it reasonable? Because I'm not giving absolute. I'm giving like 75% assurance. Why is that the case? Because remember, my profession allows me to work with what are samples. I'm testing, I'm not looking at the whole, right? So some things in this case here will be truthful Some things will be truthful. There will be other things in this case which will be what here fair because of what here the judgments. Right? Right? But again, ladies and gentlemen, especially for things going to the future, the cash flow focused, the cash flow, for example, forecast, the budgets, etc. Where's your muganga? Hata hakuna muganga anaweza kujua how the future will be, right? So in that particular case, ladies and gentlemen, please, here we shall be giving what we call a negative assurance, So I'm assuring you, but in a negative way, not that I want to discourage you. Here up, remember what CPA Dennis told you, up there is a positive what here? Assurance. Positive assurance. So under positive assurance, reasonable assurance, or even absolute assurance, I'm saying authoritatively that the financial statements of RCM portray a true and a fair view. That's positive, right? But remember, I'm saying true and fair to take care of what here, these estimations like that, like the depreciation like that. Lakini sasa ukinipatia hiyo kitu ya prospective financial information, like the budgets, etc. Yes, right? Unaniambia, for example, 2022. So ladies and gentlemen, ukiniambia 2022, for example, things will be like this and Omicron is here with us. The only thing that I will do is to come and look at your budget, do my calculations, do my casting, right? See whether the totals are agreeing. And then what I will do, if I don't find any mistake, I will tell the public. I'll be able to, in this case, here, give some form of assurance, which is negative. So I'll tell the public that nothing has come to my attention. Nothing negative. Nothing has come to my attention to doubt the accuracy of this budget. Nothing has come to my attention which will make me cast any doubt on the accuracy of this. So remember, when you are saying a positive assurance means what? Here you are at reasonable, you are up there. Here you are very authoritative, because you know this is about what here? Historical things that have happened. There are things in this case that I've done. I've been able to check some things which are very accurate, truthful. Others are very fair like that. So I can happily smile and say, ladies and gentlemen, that the financial statements of RCM portray what here a true and a fair view. But when I'm given some kind of like now this prospective financial information, reviews, like the budgets to review, as an auditor, I can't authoritatively say that the budget is truthful because things in the future can change. So in that case here, to absolve myself from any future litigations, what I'll do is to say as at today, when I was checking, there is nothing that came to my attention to doubt the figures that are given in this budget. Nothing, right? Negative. So ukisikia negative assurance definition, weanza nasema nothing. Ile nawaambianga kwa class that you know nothing. And even the nothing that you know it wrongly. You know it wrongly. So negative assurance. Now, ladies and gentlemen, listen to me very well. So we have this thing of risk. I would still want to do one question. Iko business risk. Iliko na business risk mzuri. Business risk mzuri hapa. Kidogo tu, just a moment. Iliko na business risk mzuri sana hivi. Let me see this question number 103. Nope. No, and this is not the very best for me. 5. Kidogo tu, tulia kidogo. Yes, 59. Ni mmeanza kwenda kazini ama mna work from home? Is anybody who is working from home here? Anybody working from home? Ama wengi wameanza kwenda kwa kazi? Mimi na work from home. Great, we're almost nabaki na swali mbili peke yake. From there I should be able to release you. Great. Nitafanya hiyo. Great. Kwani sipati question ya risk? Nilikuwa nimeprepare question nzuri sana ya business risk. So 30, Bill, I would want us to read this very fast. You are a senior audit manager in SAC company, a firm of chartered certified accountants. This morning, you've been reassigned to the audit of Bill Limited, a long-standing audit client of your firm, as the manager previously assigned to the client has been taken ill. Bill Limited has a year ending 30th June 2021, whichever, and the audit planning has been largely completed by the previously assigned audit manager, Tara Lafayette, who had been recruited by your firm 4 months ago. Bill Limited is a property 4 months ago. Unajua hapo kuna risk, anaweza kuwa ajui kazi huyu, ni mtoto bado. Bill Limited is a property development company specializing in the regeneration and refurbishment of old industrial buildings which are sold for commercial or residential use. All property developments are performed under specifically negotiated fixed price contracts. The company was founded 35 years ago by 2 brothers, Alex and Ben, who own the majority of the company's share capital. Alex and Ben are nearing retirement age and are planning to sell the company within the next 2 years. The forecast revenue for the year ended like that is that, and the forecast profit before is that. The financial wametupatia, you have just received the following email from the audit engagement partner to audit manager from audit partner regarding a Bill Limited audit planning. Hello, thanks for taking on the role of audit manager for the forthcoming audit of Bill Limited. I have just received some information on 2 significant issues that have arisen over the last week from Sam Compton, the company's finance director. This information is provided in the attachment 1. I'm asking you to prepare briefing notes for my use in which you explain the matters that should be considered in relation to the treatment of these 2 issues in the financial statements, and also explain the risk of material misstatement relating to them. I also want you to recommend the planned audit procedures and should be performed in order to address those risks. In addition, please critically evaluate the planning that has been completed by previously assigned audit manager. Relevant details are provided in the attachment 2, which contains notes made by her and placed on the current year audit file. Make sure you include discussions of any ethical matters arising from the notes and recommend any actions you think are necessary. So attachment 1, let me see how big it is. Attachment 1, information from Sam Compton, finance director of Bill Limited. In the last week, 2 significant issues have arisen at Bill Limited. The first issue concerns a major contract involving the development of an old riverside warehouse into a conference center in Bridgetown. An architect working on the development has discovered that the property will need significant additional structural improvements. So kuna risk. This thing is not stable. the extra cost of which is estimated to be 350,000. Remember huko juu ametupatia mambo ya profit na nini, so kuna mambo ya materiality. The contract was originally forecast to make a profit of 200,000. The development is currently about 1/3 complete and will take a further 15 months to finish, including this additional construction work. The customer has been told that the completion of the contract will be delayed by around 2 months. However, the contract price is fixed, and so no additional cost must be covered by Bill Limited. The second issue concerns a property held under a 10-year operating lease. The property is a large warehousing facility where Bill Limited until recently stored equipment and inventory such as bricks and cement. Bill Limited has purchased a new warehouse to store these items. So the leased facility is currently unused. A board minute dated the 1st June 2021 states the operating lease has 8 years left to run and it cannot be cancelled without incurring significant penalty. We are considering subletting the leased facility, but I have been advised that the market rent that we could charge is considerably less than the rental payment that we are making under the lease. So there is a risk there that you'll make losses. Now, because of time, I would want us just to go to the answer and read it. And ladies and gentlemen, I wish you success. Because of time, please just allow me to do that. Atoshinda hapa sana. Kilicho na mwanzo kina nini? 30 bill. Kilicho na mwanzo kina mwisho. Kilicho na mwanzo kina mwisho. Actually, to me, what I came to sell to you today ni concept ya nini? Ya confidence. Concept ya confidence. Great. So, ngoja kidogo. So factors to consider, you can see what they're telling us here. Loss-making contract. Identify the loss-making status of the contract. Risk of misstatement, right? So tukija hapa, tunasoma haraka. Remember the format is very important, briefing notes. So first issue, breach down, matters to consider, contract loss. This appears to be a loss-making contract. In accordance with the IAS 11 construction contracts, the loss should be recognized immediately when expected cost exceed revenue. This is the case here, as the additional expected cost of 350,000 turns the previously expected profit of 200,000 into a loss of 150,000. At 6% of profit before tax, the loss is material to forecast profit before tax. Possible penalties: the contract will be completed 2 months late. This may result in penalties being incurred by Bill for the late completion. This should be provided for in accordance with the IAS 37 provisions, contingent liabilities, and contingent assets. Possible management bias: Alex and Ben plan to sell the company in the next 2 years and therefore may seek to increase its value. Of course, you know that. Risk of material misstatement. Risk of material misstatement. We are told contract loss. There is a risk that the profit is overstated by this. Possible penalties: the risk is that if there are indeed penalties and no provision has been made, then liabilities are understated. Possible bias: the risk is that the provision or loss of a contract are not recognized in an effort to increase Bill's what-year valuation. Look at the audit procedures. Inspect basis of the estimate of that extra cost, e.g. the architect's report. Discuss the 350,000 estimate with employees to assess if it's reasonable. Discuss 2 months additional time frame with employees to assess if it's, you go to the employees, remember your scope of work. Utaambiwa ati usiongea na huyu, wewe utaongea na kila mtu, right? Recalculate the forecast profit. Inspect the signed contracts to verify the price and to check if there are any penalties for late completion. Review financial statements for provisions like that. Hata kama hatukusoma, kuna second issue ya operating lease. Please allow me just to speak through it at a high level. So unasema matters to consider, the lease may be onerous. Onerous contracts, ladies and gentlemen, are those contracts that make a loss at day one. You get into a business like now, this during this COVID-19, there are insurance companies in this case that are just issued insurance contracts like for medical covers, which on assessment from day one on issue, they were to make losses now moving forward. They're called onerous contracts, right? Right? Which is a contract where the unavoidable cost exceed the expected inflow of economic benefits. So Bailey is not using the site, so is deriving no benefit from it in this way. A significant penalty would be incurred if the lease were cancelled. If the lease were sublet, then cost would still exceed rental revenue received. Since both of these options would result in those exceeding income, the lease appears to be onerous contracts. And onerous contracts, the entire loss is booked in the income statement. The entire loss is booked in the income statement. There are so many provisions that you need to give. So, ladies and gentlemen, I want to take this opportunity to so seriously thank you for having really chosen us, especially for your last minute crash program. So it has been an honor for me to stand before you, and I know God's grace has been on us. And I'm so sure that whatever we've discussed here with, of course, the grace that we will also be able to bestow upon you, I'm so sure we shall be able to succeed. So let's get out there. As we get out there, because I know we are finishing and we are passing, as we get out there, number one, ensure that you are a member of ISPAC, and then learning should continue. If I'm an accountant and I'm looking at this 21st century that is happening in the light of this COVID environment, I need to be tech savvy. To be tech savvy, I must ensure, ladies and gentlemen, that I know a lot of Excel. Excel is the addition, and that is why I've introduced this Excel course, which is starting on the 18th night from 7 p.m. to 9 p.m. for 5 days, and I have already issued the program. So you need to join that Excel. It's only for 2,000 bob. And remember, our number is 0719 525,000. So ladies and gentlemen, that is it. I speak blessings to you. Command your day. Say that this day will be nice and you're going to pass. Otherwise, thank you very much. Cheers. See you next time in Excel, and of course out there in our other professional engagements, because I believe that I will not be teaching you again at this level. That is not us. Thank you very much. Bye-bye.